All right, guys, I want to jump in here with Disney results. Their earnings being released here just a moment ago. You're looking at shares up just a fraction here in extended trading. In terms of the top and bottom lines, we're seeing a beat from Disney. Revenue coming in $23.51 billion. Estimate was for $23.37 billion, so a slight beat there. Adjusted EPS of 99 cents. The estimate was for 74 cents. We're taking a look at its DTC business. Revenue during the quarter increasing 13% to $5.3 billion, but operating losses we're coming in at $1.1 billion. Also, Disney Plus subscribers, that number missing the street's estimates, 161.8 million. The estimate on the street was for 164 million, so a miss there. Total Hulu subscribers, 48 million. That's also a miss, a million light. The estimate was for 49 million here. But again, the street, or again, shares moving slightly to the upside here after hours on the headline beats on both the top and bottom lines. Also, their parks division, revenue there, $8.74 billion.
On expectations of, do you know what those were?
Looking here, no, we're just looking at the $8.74 billion there on parks. But still, you got to take into account the fact that some people might be pulling back some of their spending. The $8.74 billion number, talked about how crowded those parks are. It looks like pretty strong results there for the company in that division.
Yeah, it's just become the expectation, hasn't it, that the parks are going to continue to perform. I was at Disney just a couple of months ago. I can tell you every single hotel on the property was sold out for the entire time I was there. They are strong. You have
certainly, and it is a beat on the expectation there for parks. The $8.74 billion estimate was for $8.08 billion, so beat there.
Considerable
in their parks division as well. So again, the stock slightly higher here, Pros, in after-hours trading.
Yeah, I don't see a slight miss there. I think you mentioned, Sean, and Disney Plus subscribers down like about 2 million miss off there. So, we're hearing that Iger's going to focus more on profitability as opposed to expanding growth with those Plus streaming numbers. So I want to maybe hear a bit more color on that. Not obviously always a good thing when you don't hit those numbers, but if you're able to kind of charge more for that service, and grow not at the highest rate, but also just kind of increase the margin there. It's a good thing, too. Obviously, that parks number, we're all really curious about that and how that's trending. And I imagine holiday numbers were so strong. How are we going to see that trickle into 2023 is pretty big.
Yeah, and also in this report, the company is saying that it recorded charges of $69 million related to exiting our business in Russia. CEO Bob Iger, in the earnings release, the statement there, we believe the work we are doing to reshape our company around creativity while reducing expenses will lead to sustained growth and profitability for our streaming business, better position us to weather future disruption and global economic challenges, and deliver value for our shareholders there. But again, beat on both the top and bottom lines for Disney, although Disney Plus subscribers, a slight miss there by just about 2 million.
Will be interesting to hear reducing expenses. What exactly does Mr. Iger mean? Will there be layoffs ahead for Disney?